Hello, good day. I am Cesar Melendez, Sales and Technical Service Manager for Alte Group in Mexico region. Let's talk about the global economy and graphite electrode industry. This is August Market Outlook Review, published on 30th of September 2025. Global crude steel. China's steel output is anticipated to decline in 2025 due to weak property demand and export constraints. India continues to grow rapidly due to infrastructure and manufacturing demand. Top countries had declined in the last month due to weak global demand: Japan, Korea, Germany. USA, Turkey, and Iran had an increase in production. US growth is fueled by demand in construction, energy, and defense sectors. Turkey, the increasing linked to infrastructure recovery efforts, especially post-earthquake, export expansion and modernization of steel facilities. Iran, domestic infrastructure on energy projects are sustaining growth, with Iran showing the highest year-on-year increase among the top producers. Graphite electrode outlook. Needle coke and low sulfur anode coke demand. The needle coke market size is estimated at 2.2 million metric tons in 2025 and is expected to reach 4.5 million metric tons by 2030. This rapid upswing stems from the parallel rise of the electric arc furnace, EAF steelmaking, and lithium-ion battery manufacturing, two sectors that together reshape global carbon material demand. The steel industry, moving toward the EAF technology, is intensifying the call for ultra-high power graphite electrodes, while the electric vehicle boom is expanding synthetic graphite anode requirements. Tight feedstock availability, geographic concentration of production, and new trade controls are creating persistent supply tension that reinforces upward pricing trends across the needle coke market. In some market reports, there are mentions of the investment or expansions by Phillips 66 USA and by Indian Oil Corporation, aimed at the higher purity or battery-grade needle coke synthetic graphite supply. However, these are often preliminary or partial expansions, not full new large standalone plants. Global steel makers are accelerating the shift from blast furnace to EAF technology to cut carbon emission and improve raw material flexibility. EAF installation already contribute 30% of world steel output and account for 43% of planned capacity additions slated for late 2025. India's national steel policy targets an EAF share of up to 40% by 2030, while China seeks a 15% EAF contribution by 2025. Each new furnace requires ultra-high power electrodes that rely on premium petroleum needle coke, so steel decarbonization directly enlarges overall needle coke market demand. Industry moves. 1. Graphite India Limited, GIL, expanding electrode capacity by 25 tons per year. This is from 80,000 to 105,000 per year. GIL has also invested in the shares of Graphite International, a New York Stock Exchange listed company, through secondary market transactions, overseas portfolio investment scheme of foreign exchange market. The company has invested in about 7% stake in Graphite. HEG Limited adding 15,000 tons per year to its graphite electrode production. Conclusions. The full effect of tariff increase have yet to be felt, with many changes being phased in over time and companies initially absorbing some tariff increases through margins, but are becoming increasingly visible in spending choices, labor markets, and consumer prices. The International Monetary Fund and World Bank projects a modest global growth rate of approximately 2.5 to 3% for 2025. This reflects a slowdown from previous years, influenced by tightening monetary policies and ongoing geopolitical uncertainties. The negative momentum of first half of 2025 continues. Weak demand, trade restrictions, lower growth. Any seasonal or rebound effects are modest. Major producers, China and Europe, continue to face constraints. Growth in some regions, as an example India, Southeast Asia, partially offsets declines elsewhere. Thank you very much for your attention and hope to see you in the next episode of Market Outlook. Bye-bye. Global economy prospects. Global growth was more resilient than anticipated in the first half of 2025, especially in many emerging markets economies. Industrial production and trade were supported by front-loading ahead of higher tariffs. Advanced economy. Growth in advanced economy is expected to remain subdued, with the US and Eurozone countries experiencing growth rates around 1.5 to 2%, while Japan's economy is projected to grow at a slower pace due to demographic challenge and low inflation rates. Emerging markets. Emerging markets, particularly in Asia and Africa, are anticipated to see slightly higher growth rates ranging from 4 to 5%, driven by infrastructure investment and a rebound in consumer demand. U.S. bilateral tariff rates have increased on almost all countries since May. The overall effective U.S. tariff rate close to an estimated of 19.5% by the end of August, which is the highest rate since 1933. For 2025 world, GDP growth is now projected at 2.3%, down from 2.7% in January. Key risk, headwinds, and themes. 1. Escalating trade barriers and policy uncertainty. A major theme is the buildup of tariffs and trade tensions is acting as a drag on global growth. Nearly 70% of economies have had their growth forecasted lowered compared to the January due to increased uncertainty. 2. Investment in many emerging markets and developing economies is slow, limiting productivity gains and job creation. Diminished foreign direct investment is highlighted as a constraint for long-term growth. 3. Many countries, especially low-income ones, are grappling with elevated debt burdens, climate shocks, supply chain disruptions, and conflict add further stress to fragile economies. 4. Inflation, monetary policy, and divergence. Although global inflation is easing, many regions will still see high inflation, especially developing economies. Central banks face the challenge of balancing inflation control versus not strangling growth. Brent crude price. Brent fell to $67 per barrel in September 2025. Over the past month, Brent price has risen 2.5%, but is still about 10% lower than a year ago, according to traded on a contract for difference. Iron ore fell to $105 per ton in September. Over the past month, iron ore price has risen 3.6% and is up to 14% compared to the same time last year, according to traded on a contract for difference. Steam coal price. Coal rose to $103 per ton in September. Over the past month, Coal price has fallen 7% and is down 26% compared to the same time last year, according to traded on a contract for difference. Steel scrap CFR Turkey. Offers in Turkish import scrap market are around $340 per ton CFR, with some supplier pushing for 345, 350 CFR. Some recent deals and offers to deep sea scrap are in the range of $375, $385 per ton CFR. The price appears to be roughly in the range of 340, 380 CFR Turkey, depending on timing, origin, cargo type, etc. Hot rolled coil steel, FOB China. Prices are in the range of $460, $480 per ton, FOB China. For common flat hot rolled coil, grades and thickness around 3 millimeters white coal, some variation depending on port, etc. Grade, supplier, contract size, and shipping lead time. Hot rolled coil steel, Europe. Work cable price for domestic hot rolled coil in Northern Europe were estimated in the range of 580, 585 euro per ton. Trading was still limited, but buyers cautiously waiting for more clarity on the European carbon border adjustment mechanism and for demand to pick up momentum. Tin price fell to $33,700 per ton in September 2025. Over the past month, tin price has fallen 0.41%, but it is still 6% higher than a year ago. Aluminum fell to $2,700 per ton in September 2025. Over the past month, aluminum's price has risen 3.5% and it is up to 7.5% compared to the same time last year. Copper around $450 per pound in September 2025. Over the past month, copper price has risen 3.4% and it is up to 7% compared to the same time last year. Zinc fell to $2,900 per ton in September 2025. Over the past month, zinc's price has risen 3.8% and it is up to 0.71% compared to the same time last year. Gold price is around $3,700 per ton in September 2025. Over the past month, gold price has risen 10% and it is up to 40% compared to the same time last year.